David, welcome to the podcast.
Thanks so much for having me, William. Big fan of your podcast.
Thank you. So, for our audience, David Yen is a partner at GSR Ventures, a venture capital firm with nearly $4 billion in capital for various projects. You've gone to Harvard Kennedy School. You've graduated from the Graduate School of Business at Stanford. You attended Yale undergrad. You've had an extraordinary career from everything from reporting to private equity to consulting and now venture capital. Let's dive into specifically your latest step in your career. Why is venture capital the path you chose to pursue?
Yeah. No, first of all, so glad to be here, and I love to just have a chat about our lives and what we're up to. So how I ended up in venture capital was pretty serendipitous. First of all, I've been doing startup stuff for a couple of years, and I think what I've liked about startup is just how dynamic it is. Right, you see a startup on maybe at a Series A stage. It's maybe like five guys and girls and a dog, shipping a product, maybe getting initial sales, and just seeing like how through a lot of hard work, innovation, and just hustle, like in a few years' time, this could be $1 billion company that maybe define its own vertical, and it's serving like customers around the world. Like to me, I just find that so dynamic and so interesting, and how that really transforms a lot of industries. As we know, like I think some of the biggest companies in the world today, like most of the Magnificent Seven, they were VC-backed companies. So I think that was kind of how I first got interested in startups.
Yeah.
And I think then the question is, do you want to create a startup or operate a startup, or do you want to invest in startup? And that was the question which I had. I spent a couple of years operating at a startup. And to me, first of all, that was very instrumental to me wanting to do investing now. And I think that gives me a lot of empathy as an investor, because I've been
on the other side.
On the other side, yeah, exactly. You've seen how it's like to run out of cash. You've seen how it's like how difficult it is to close a deal. So I've done the operating side, and I think at this stage, what I really wanted to do was more the investing side, and that's how I ended up in VC.
That's an extraordinary story. For our audience, I want us to go into specifically what is the nuances of venture capital and the basics. For our audience who haven't been in the industry or is really interested in the industry as a career, as you've successfully done. So in a minute, tell us a little bit about what is basically venture capital.
Yeah. I think, first of all, venture capital, it's basically higher risk investments. And what you're doing is that you're investing in startups or founders at a much earlier stage of the company when there's much less traction. By the time you have a lot of traction, you can probably go to a bank for loans. You can probably go to a private equity firm for investments, or even go public. But I think at a much earlier stage of the company, when there's far less to assess a company on, this is where you go to a venture capital firm. And so what venture capital is about is ultimately making bets about what could potentially become very big. Yeah. Because at the end of the day, if you invest in 100 companies, maybe 90% of them will die. And that's okay, because that's the whole point of venture, right? That it's a high risk, high reward. Most ideas don't work out. But the idea is that if you go in early into a few of these companies that could end up being very generational companies, the likes of Google, the likes of Facebook, then you both return the fund and you make money for the fund, but you also end up backing these companies at such an early stage that they will end up paying for all the companies that end up not making it. So I'll say it's very much around, if you take the risk reward framework, it's basically going for companies that are more high risk, high reward.
That makes a lot of sense. Tell us a little bit about what life is like. What is the life of venture capitalists like?
Yeah, so I think a lot of people watch, HBO Silicon Valley.
Of course.
And, I watched it myself, right? And I thought I was just going to be partying and schmoozing every day.
Yeah.
In reality, the life of venture capital is I would say it's much more boring in a way. But I definitely do enjoy, I think, a lot of the excitement that comes from meeting new companies, working with existing companies to help them grow. But I would say there are basically two main parts of the job. One is making new investments, and one is managing existing investments. I think as part of the making new investments, I think it comes from a few areas. First of all, it's figuring out where you want to invest. So now being early part of the year, it's actually when I think a lot about, hey, what are some of these tailwinds? And what are some of these themes I want to invest in for this year? So figure out where you want to look even for investments. And then I think then it's about how do you then find the investments that fit the thesis that you have. So this includes some of the stuff that people think about, like the schmoozing, the wine and dine. But in reality, I think it's a lot about just, being plugged into the startup ecosystem, like supporting founders even, without the expectation that you're going to make an investment, right? Maybe talk to someone working on a fintech idea. And even if this person doesn't end up being an investment, maybe they like you so much that they refer you to their friends who's working on something great. So I think a lot of it is like investing in the ecosystem such that you can hopefully make the investments in the area that you believe in. Happy to go more into this part. And I think the second part of the job is more about, once you've made the investment, there's still a lot of work in making sure that this company ends up succeeding.
Yeah.
I don't want to overplay the role that VCs play because at the end of the day, the founders and the management team, they're the ones in the trenches doing real work, right? Like when I hear VC says that they're in the trench, I do cringe, right? Because we do work, but not that type of work. But I think at the same time, I think VCs do add value in terms of, first of all, what we see in the market, what we see at competitors, what we see in different industries or companies at different stage. I think we can help to transfer some of this knowledge or best practice or just insights to our portfolio companies to help them think about, hey, this is the time where you should start hiring for particular roles. Or this is the time that you should, this is how you should think about fundraising and pricing for a next round. So I think some of that we have to work with the portfolio companies after we invest in them to ultimately help them realize the full potential.
Absolutely. Now you touched on an important point. Are you adding positive value? And I'm going to touch on your HKS, background because HKS is all about public service, not the business school end of things. There's been like criticism, right? And it's in the title, capitalist, venture capitalists. There are a lot of people that say, like capitalism is bad. Venture capital is all about profits. But why do you believe that, why is venture capital adding positive value, societal value, not necessarily just shareholder return values? Like, do you believe there is positive value added to society, and how might venture capital do that?
Yeah, I think first of all, as I mentioned, so many of the biggest companies in the world and most transformational companies in the world, I think maybe more than half of the 10 largest companies in the world were venture backed, right? So without venture money, it would have been very hard for them, to get off the ground. Some of them, like Google, they were PhD students that were interested in reinventing search, right? At that time, there was no bank and no one that would have given them the amount of money to really get to where it was. So I think venture capital, again, not to overplay the role, I think they do help some of these early stage disruptive companies get off the ground and sort of set them on the path to eventually become a truly transformational company. So I think that this is where venture capital could play a role. Obviously, part of it is, what kind of companies we should fund. Because you could also fund companies that encourage gambling, encourage all kinds of issues, right? Or people do wonder whether Instagram or Facebook is good for our mental health. Right?
Absolutely.
So I don't think it's always black and white. But I think in terms of the role that we play within the whole value chain of capitalism, I think we do help early stage companies get off the ground. I mean, in a way, sometimes I think about companies like humans, right? I think venture capitalists are very much like, it's almost like kindergarten, right? We're helping like babies sort of, figure out the basic stuff before they can grow into humans and hopefully one day flourish.
Absolutely. Well, let's talk about some of your work as a partner at GSR Ventures and how you've perhaps helped some companies flourish.
Yeah.
What is, for those that are entering that career, what does it mean to be a partner at a venture capital firm? And then we'll dive into a little bit of your projects.
Yeah. So first of all, GSR Ventures, we've been around for around 20 years. We started very close to Stanford because our founder went to Stanford, and we've been fortunate to back some companies that have obviously done very well over time. I think what we do as a partnership is the few of us that are in the partnership, we do work very collaboratively. Like in fact, we have a meeting every single day.
Wow.
I mean, it's not super serious, right? But at the same time, we do like exchange ideas. We do help each other improve our thinking, and there's a lot of synergies that we extract as a partnership. For example, someone looking at different industry, or looking at a different geography, or looking at similar companies at a different stage. I think they could contribute ideas that could be helpful. Let's say for me, when I'm trying to form my own thesis or make an investment or help an existing company become bigger. And I think, I guess based on what I do on a day to day, I would say a big part of it would just be, first of all, evaluating a lot of the companies that are coming through the pipeline. And again, pipelines could come from referrals, could come from some inbound, some outbound, some of the ecosystem work and so on. And I think the first cut that I have to make is typically I'll put companies into three categories, right? Great, good, and not so good.
Right.
What I found is that it's actually quite easy to tell the not so good companies, right? Typically, for various reasons, right? Like they're not so good. It's easy to filter this out. But I think the key work comes between trying to filter the good and the great companies. And time is scarce for all of us. So as a venture capitalist, I think it's really deciding how do you want to spend time, even with the companies that are coming in top of the funnel. Is this more likely to be a good company or is this more likely to be a great company? So I have to spend a bit of time, before even speaking to them,
Right.
to even try to figure that out. And then if you think it could potentially be a great company, then it's about, starting to spend some time with the company, having a first call. And typically, if you do feel like, hey, this is a great company, we'll take it, to the partnership. We have some discussions. Maybe we meet more of the team, try out their products, visit the team, and eventually decide if we want to make an investment.
Absolutely. Now, a lot of venture capital firms, when they make an investment, it's not just the money, right? Like Sequoia and other top firms, they claim they have an ecosystem, they have a network, and they have, of course, intrinsic value that once they've invested in you, they've also are going to add value in other ways as well.
Yeah.
What about for your projects, the projects you've invested in? How have you specifically as a partner helped, or like for the projects you invest in, what do you specifically you might do that is a unique, value add that you've kind of brought to the table?
Yeah. Yeah, I would say it comes in a few potential ways. One, partly comes from some of the more either industry specific or some of the more operational know-how. Whether it's from our own experiences or from some of the other companies we've seen, right? So, for example, just last week, we spent a whole week with one of my portfolio companies in the UK. And what they do is a company called Finturn. And so they're like an open banking meets AI fintech company, trying to extend credit to people who otherwise are just being left behind by the financial system. So what was interesting for me is that I used to run a similar business myself. So in a way, obviously, it's, markets are still different. No two companies are the same, but there's a bunch of know-how when it comes to the industry that I could try to share with them, right? Like in terms of, hey, maybe at this stage of the company, you guys are starting to turn profitable. You better think about hiring someone to look into taxes. Because at this stage of the company, you're going to start to become profitable. The government is going to come after you for tax. Are you able to write off, credit losses as a tax deductible and all that? So I think sharing some very tactical stuff like that is one way I can add value. I think the second way that we add value would also be some of the more like business development opportunities. And this could include actually within even some of our portfolio companies. So for example, I've invested in a couple of portfolio companies that are in the direct to consumer space. So they make stuff like shavers or t-shirts and all that, and they sell it digitally. And also have a portfolio company that does AI generated content, marketing videos for consumer companies. So a very direct way of creating synergies is just by bringing them to each other. Being,
Yeah.
hey, do you want to try their product, right? And sort of knowing both sides well, I think creates that starting point of trust where at least they
Yeah.
talk to each other as fellow portfolio companies.
I see.
They give each other a good price and they try it out. So I think that's another area where we add value.
Now, in the industry itself, how might a company specifically, if they're a brand new startup, they're very early, how can they effectively approach a firm like yourself, and make a compelling pitch?
Yeah. So I think just like for us,
Mm-hmm.
the first question we think about is where do we want to invest in? I think similarly for startups, I think it's useful to them to do some upfront investment
Yeah.
on what kind of investors are suitable for them,
Yeah.
right? Because the reality is, if you are a startup, for example, let's say with just an idea, you should be looking for angel investors. You should be looking for some of these incubators. You should be looking
Yeah.
for some of these pre-seed investors. Versus if you look for a Series B investor, they're probably just not going to invest in you, right? They're probably they might have a first conversation, but even then, they're going to say no. So I think even figuring out who to talk to, I think that's such a big part, right? I feel like there's a lot of founders who think that getting a conversation is the key part. But to me, I think doing the research upfront to figure out if this is likely to be a good conversation, I think that's where I would spend more of the upfront investment, right? Like, do they like your space? Right? Have they invested in similar-ish companies at a similar stage? Have they done an investment in the past 12 months? Right? I think those would be some of the things I'll think about. And then how you approach it would be, I think, first of all, just trying to think from the investor's perspective, right? Like trying to get, some of the facts out sooner to at least pique their interest and to make sure that, this is something that could be mutually beneficial, right? Versus again, I wouldn't spend like 2 hours trying to take them through like the history of the company, do a full product demo just to figure out that, hey, maybe this is not worth it. In fact, I sometimes compare founders and investors meeting to even going on a date, right? I think the point on the first of all, I think you should spend time to figure out if you want to even go on date with someone, right? But I think even the point on the first date is to spend as little time or as little cost as possible to decide if you want to have a second date versus spend too much time going on a Michelin star meal and having an awkward conversation for 6 hours just to realize hey, let's not meet up again, right?
Yeah.
It's kind of a waste of time on both sides.
Absolutely. Now, there are a lot of startups who succeed or fail, and whether it's an interesting space, interesting technology, interesting founder. What for you is more important when a startup approaches you? Is it the founder or is it the technology or the concept itself that draws your interest?
Yeah. So going back to the earlier question of, I think the type of investors and the stage they look at is very important. So for me, I look at around the Series A stage.
Right.
So Series A is typically the company has a product and it has some early traction. And you're betting that, hopefully it's going on a hockey stick growth and you catch them at the right time. So I think at my stage, I look for obviously like, great founders and all that, but I do look for some traction. I would say that, at a much earlier stage, let's say a pre-seed or even a seed stage, that's where honestly, maybe you have a product, maybe you don't have a product, maybe it's more of a concept. I think it's a lot more of a founder and a space bet, right? They're betting that you're cracking a space that's going to be disruptible. But that being said, I would say that even for my stage, I would say that having good traction and good concept, attractive space, I think those are all sort of the must-have that will give me the conviction. But I'll say that I do place a lot of premium on a great founder or founding team.
Yeah.
Yeah, because what I realized, in fact, I'll use a phrase that I think was from either Warren Buffett or Charlie Munger,
I'm
which
from Omaha, so
I'm sure you know them well, right?
absolutely.
Did you say you went to their house for Thanksgiving or
I don't know if
some
it was
trick
there.
or treats?
My elementary school, when I first immigrated to the U.S., was called Washington Elementary. It's around 50th Street, I think, in Poppleton, if those remember.
Yeah.
But it is like about a 10-minute walk or so from Warren Buffett's house.
Hmm.
So, and some of my friends lived in that neighborhood. So it
Yeah.
was easy, I believe, to walk past. Although back when I was, 7 or 8, it was, didn't know he was that big of a deal at that
Yeah.
point in time.
Well, maybe that's what your neighbors will say one day.
Absolutely. We'll see.
Yeah,
We'll see.
we'll
Same for
see.
you as well.
But yeah, I think quoting from your neighbor,
Yeah.
I think they had a phrase that says that they rather pay up for a great company at a good price than to pay up for a good company at a great price. And I think it's similar for me in that you can replace company with founder.
Yeah.
In that I think a team with really great and if not exceptional founders, they could go very, very far. But then if you invest in founders at a Series A stage where you feel like, maybe after 2 years they're gonna cap out or they're gonna not grow as quickly, I would tend not to make the bet. Because I think ultimately if the founders cannot grow along with the company, they're gonna, the company's not gonna grow as quickly. And the replacement cost for a CEO is extremely high, in any company, right? But especially for a startup.
Absolutely. Now, as you mentioned, speaking of startup CEOs, what might, from your experience, was your portfolio companies, but also, just in the general sphere of startups, we've seen many CEOs that are extremely successful, as mentioned, Google, Meta now, but there are also CEOs that, didn't do so well. What do you believe might set these CEOs apart?
Yeah, so first of all, I'll explain in two ways. First of all, I think there are some concepts that apply to almost all founders. At the end of the day, I think founders need to have very much of a growth mindset because at the end of the day, you have to keep pivoting, you have to keep iterating, you have to keep growing, even if the company is growing, right? You got to keep growing as well. I think a growth mindset is important. I think someone who's a great communicator is important. I used to not care about communication, but what I've come to realize is that, if a founder cannot communicate well, typically they just haven't thought about things very clearly.
Yeah.
Right. Like I think your clarity of communication, I think conveys your clarity of thought. And if you can't communicate well with investors, you probably can't communicate well with your team, with your partners and other investors. So I think communication is very underrated. I think someone who knows how to hire and manage a good team is important as well. Because at the end of the day, you're not gonna go the distance yourself, right? Someone who knows how to hire other type A people to come on the journey and inspire them. I think that's hugely important. The second thing I would say is that I think there's a lot of founder market fit that people ignore. Because I think there's a kind of founder that works well for a kind of company that people sometimes tend to ignore. Right? To give an example, I think okay, here's a couple of trends that I've seen, right? Okay. I feel like a lot of folks for a lot of founders in the more social media space, I think they come from, more credentialed backgrounds. And part of it, you look at the Mark Zuckerbergs of the world, right? Went to school here at Harvard. Or, the Snapchat guys, we invest in a company called Xiaohongshu in China. That's now a $20 billion company. Like most of these founders came from very high credential backgrounds because a lot of social media, it's about the transfer of social capital and the growth of social capital. So coming from a background where you have more social capital, I think you start off with the communities where, that has more social capital and so on.
Absolutely.
So I think that's, for example, a space that I think certain backgrounds tend to do better versus, for example, the folks that tend to do more like, the e-commerce, food delivery type. It's not that credentials don't matter, but I think it takes someone who's very operational. Because if you think about e-commerce and all that, the margins are thin, right? You got to be the type
race to the
where
bottom.
race to the
So many
bottom.
startups in that same space,
Exactly.
competing for the market share.
Exactly, right? It's not rocket science, right? It's about, sheer execution. And I think it takes someone who's very operational, who, like, I think Tony Xu from DoorDash, I think part of the reasons why he won was that, he used to work at his parents', I think, takeout store when he was
There
a
we
kid,
go.
right? So he really gets to understand, first of all, like, how hard it is to be a restaurant owner, but he also understands, right? Like, every cent counts. So I think it takes a bit of that mindset versus, for example, if you're looking for someone that's working on the next vaccines or biotech,
Right.
then obviously looking for very technical people.
Absolutely.
And it's the same, for example, like everyone talks about AI now.
Right.
And to me, like even within AI, the
Yeah.
folks working on AI foundational models and the folks working on AI tooling and the folks working on AI application, I think there's a bit of founder market fit as well.
Understood. That's very insightful. Well, speaking of AI and the future, what are your thoughts on kind of the AI industry in 2024 and beyond? I know we had a golden era of VC and startups, especially in the last decade. But lately, we've seen a lot of, with the effects of COVID, we've seen a lot of also startups fumble. We've seen a lot of VC capital, be less than it was in the last decade.
Yeah.
Where do you see kind of like, we're now nearly halfway through the 2020s, venture capital kind of its role, its size, its the industry and its impact in this coming half decade?
Yeah. I think first of all, I do feel like for startups and VCs, there's going to be a bit of a normalization, if you will. I wouldn't say correction because I think the past few years was more of the abnormal. Right. There was
abnormal high.
Right. Like you look at this chart of like, let's say multiple, whatever multiple you want to use, right? I think it's been relatively consistent over the time versus the past 3-4 years has just been completely out of whack. So I think it's more of, we're coming out from very abnormal times and we're more normalizing. I do think there's going to be a bit of rationalization in terms of, there was way too much money. There were a lot of startups that were basically zombie companies, right? And there were a lot of VCs that essentially backed a lot of these zombie companies. So I think some of that will play out and you're going to see people, startups and VCs not survive. And obviously the startups, it's going to take a while for the zombies to die because if they raised, let's say 100 million in 2021, it's going to take a while to burn all that, burn that runway. And same for for VCs as well, right? Like very similar story. If you raised a $1 billion fund in 2021, then it's going to take you a while to sort of burn that by investments. And I think just like the startup that raised too much money is not going to be able to raise the next round and probably go out of business at some point, unless it's profitable and all that. I think it's the same for VC funds, right? If you can't prove that you can generate alpha, and alpha not just in terms of the markups that you have, but in terms of the actual cash that you can return to your investors, the LPs, then I think it's going to be hard for them to raise the next fund, and therefore some of them will die. So I think it's going to rationalize, it's going to play out. But that being said, to what you mentioned about AI, I do think AI is one of the most exciting things that's happened for a while. And I think just like, for example, if you look at the iPhone moment in 2007, it spawned so many mobile first companies, right? The likes of, Uber wouldn't have happened without a mobile phone, the likes of Instagram, Tinder, you name it. I think AI could create something similar in that a lot of these new generational companies could emerge out of it. And I think what could also happen if you look at, let's say, the browser or the mobile or different generations of technological maybe advancements in the past, is that maybe it's going to take a while for these truly generational companies to come out, right? When the iPhone first came out, people were trying to create apps like, hey, here's a better notepad, right? Or here's a better torchlight, or here's a better clock. Yeah, because that's what people could imagine given what's happened there. But if you look at, let's say, an Uber, I think what Uber did was essentially you're overlaying mobile technologies with GPS, with mobile payments, mapping technology, Twilio, and all that. to essentially create a stack of apps put together, compressed into a Uber. And I think some of these more disruptive AI native applications could be the same as well. Where again, I'm not a futurist. It's hard for me to predict what it's gonna look like, or otherwise I might as well go build it myself. But I think some of these very disruptive stuff could be something that we wouldn't even imagine today.
Absolutely. I mean, we I don't think we could have imagined what the phone would have been in the early 2000s, and certainly not, AI in the last decade. Now, diving into, your passions in VC, what are your kind of personal priorities and what are your personal passion areas that, you see you're really passionate about, what you think has really high impact?
Yeah. I would say there are a few ways to look at it. One is in terms of the sectors. So I'm very excited about fintech. I think both in terms of, I just feel like there's a couple of reasons why I'm excited. First of all, I've done it before. I've seen how there's so much inefficiencies in the financial systems and how a lot of companies can come up just to solve a part of the problem.
And be worth billions.
Yeah, or look at the Stripe or so many companies, right?
Yeah.
PayPal, even so many companies we've seen in fintech. It's also an industry that's huge profit margins. And what I find interesting about fintech is that I think it's relatively open to innovation compared to many other industries I've seen. Both in terms of, I think because money, first of all, is pretty digitized, right? So you're able to layer on, data, AI, and other stuff on top of it, right? Versus if you look at a different industry like construction, right? It's hard to truly digitize construction, maybe with some robotics and so on. So it's hard to truly disrupt the industry unless it's an industry that's ready for disruption, digital disruption. I think that's one reason why fintech could be exciting. You could apply for a loan, you could, open a stock trading account and start trading Bitcoin. And all these could be completely digital, right? Versus many other industries. And number two, I think what's interesting is that a lot of people in the financial industry, they are a bit more commercial. So it's easier to prove to them, hey, this solution works. Do you want to try it out? Here's the cost savings. Because I think most people in finance, they think in terms of, the kind of like what we learned at business school, right? Does this make sense? Does this save money, right?
Yep.
Either increase the revenues or cut costs, right?
Absolutely.
Versus, I think, unfortunately, there's still many industries where people are not as commercially minded, and therefore they're not willing to adopt new technologies and new solutions, even if it's clear that this is going to be good for them and good for the organization.
Old habits die hard.
Yeah. So I think that's sort of on the industry front. In terms of founders, obviously we invest in a broad, we've investing founders from almost every background. I'm personally very excited about some of the more marginalized founders in a way, like folks coming from underrepresented backgrounds. So whether it's people of color, people, female founders and so on. I mean, that's not what I only look at, but there is a space that I feel like I'm excited to spend maybe a little more time than the average investor. Both because, first of all, as an immigrant myself, I think I can relate to a lot of, some of the, you could say, experiences that they've gone through, or maybe some of the discrimination they faced. But at the same time, I feel like because they are underrepresented and I think they're overlooked sometimes, I also feel like there's a lot of alpha there where you can, if you find some good ones and you back them, I think they could create amazing companies like Zoom, DoorDash, and so on. Absolutely. So I think both in terms of, I think I'm passionate about helping them, but also hopefully this could translate into better returns. Absolutely.
Now I want to dive into kind of a little bit of your broader career and background too. We've talked about VC for a while. As we've briefly mentioned, you've done a number of things. You've done private equity, you've done consulting, you've done startup work. You were a reporter as well, I believe.
I don't have my own podcast,
That's true. I mean, I believe that might be coming one day.
I'm very jealous of you.
What, how did you feel, what led to each steps in your career, to now, each of those steps where, at that time, were you thinking like, I want to do this, but not forever? Or were you like, I wanted to do this, but then a better opportunity just happens to come along that drew out my interest?
Yeah. I think looking back, first of all, I was open to trying many different things. In some ways, it's almost like taking a liberal arts approach
Yeah.
instead of to school, but now to a career, where I do feel like trying out different things in different sectors, different functions, different geographies. I think over time, they do end up helping each other and they do end up being more interconnected than I expect, right? Just like I think in liberal arts, sometimes you study, I don't know, fractals and you study anthropology and you study political science, and one day you realize, hey, they're kind of related in some ways. So I think that's one part where I do embrace some of these, new challenges in very diverse areas. At the same time, I think what goes through my mind when I'm making some of these changes is I think about whether something is reversible, right? Like, am I gonna go down a path where if once I do A, it's gonna cut off like all my options forever to everything else, right? So I think that's what I think about, and I also think about when I take a job, I do want to do it, let's say, hopefully for the long term.
Yep.
But I do think about will this also at least retain some optionality in terms of other potential options I want to do.
Yeah, absolutely. Well, speaking of optionality, I want to dive into your background. As you mentioned, you are an immigrant. You were born and raised in Singapore, I believe.
So I was born in Shanghai, grew up in Singapore.
Grew up in Singapore. All right.
So I was an immigrant twice.
And then in the States, you studied at Yale for undergrad. What did you study specifically?
So I did economics and journalism, and I took full advantage of the liberal arts education. So I just studied everything that seemed interesting.
Absolutely. And then afterwards, you've worked, and you most recently, you graduated, but only a few years ago, you attended both Stanford Business School and Harvard Kennedy School. So we'll dive a little bit into the business and a little bit into the policy end of things. For many of our audiences, my past two guests have all graduated from Harvard Business School. What was your experience at the Graduate School of Business, or GSB, like?
Yeah.
And it was, I believe, during roughly the COVID period, right?
It was during the COVID period. In fact, it was interesting because I decided to go during COVID because I felt like, hey, the world was crashing and no one knew how long COVID was going to last. I still remember there was this article I read, I believe in May or June of 2020 in the New York Times, where they said that the earliest we could get a vaccine is 5 years out.
Wow.
And I was thinking like, gosh, the next 5 years is going to be a write-off. So I think that's sort of the frame of mind where I felt like doing business school during COVID, or at least, it's much better than what's out there.
Yeah. So
that it's a bit contrarian that way. But I think Stanford was an extremely transformational experience for me. I went in not having crazy high expectations, and it wasn't a perfect experience by any means. But I think it was transformation in terms of part of it. I think was just the air of the system, where there's a lot of freedom, where hey, explore this, hey, do that, and there was a lot of serendipity, right? In terms of, like, even the way I found my VC job was through a lot of serendipity. I was literally connected to a GSB alum who turned out to be my mentor. And this guy has done almost everything in his career. So I really respected his decision. And as I was thinking about what to do, I was like talking to him about it. And I was telling him, hey, I'm maybe thinking about VC, and why did you decide to do VC? Yeah. And he just, told me his reasons. And he said, hey, why don't you come work for my fund?
Wow.
So I really wasn't looking for a job. So there was a lot of serendipity involved. So I think it was very transformational in terms of, the people I met, the classes I took, and I think the overall experience and just being free to, take advantage of what the school has to offer, to talk to a lot of interesting people. That's what I did.
Yeah, absolutely. Now, what do you think is the main contrast between Stanford and Harvard business schools for an MBA program? Both are 2 years. Stanford has about 400 or so students, and then Harvard generally has about 900 to roughly 1,000 students
Mm-hmm.
a year. What do you think, besides those numbers,
Mm-hmm.
are kind of the key takeaways for somebody who is interested in pursuing an MBA education, in the next few years?
Mm-hmm.
And should they be fortunate to get both, or
Mm-hmm.
apply for either one, or thinking about applying for either of these
Mm-hmm.
programs? What makes Stanford the program for them? What
Mm-hmm.
might make Harvard
Mm-hmm.
the program for them?
Yeah, yeah, and I would also love to get your opinion, given you're going through
Absolutely.
HBS yourself, right? And it's obviously an incredible experience. I think for me, it manifests itself in a couple of ways. I think first of all, I think culture is just something that's I've always underrated in the earlier part of my career. Like when
Yeah.
I in college, when I went to recruiting sessions, and
Mm-hmm.
when the companies talk about culture and people, I just like
Mm-hmm.
zone out because I'm like, gosh, all companies should be the same, right? But over time, I've realized that I think culture is everything, right? Even like a McKinsey and a Bain and a BCG are actually quite different,
Yeah.
even if from the outside they look the same, right? And I think similarly, I think for Harvard and Stanford, like maybe the biggest difference is I think some of the intrinsic culture is a little different, and therefore I think it manifests itself in the kind of people it attracts, even the faculty, the speakers that come onto campus, and ultimately what people choose to do afterwards. I think one big difference in the culture
Mm-hmm.
between, I think, Harvard and Stanford, and sometimes what I do now is I look at the schools like model, and I just
Mm-hmm.
try to reflect on that. I think at Harvard, obviously, it's Veritas, which I think it's huge emphasis on academics, right? It's about finding the truth, and I think overall Harvard is a lot more academic,
Mm.
right? The school cares about, hey, here's the case method. We've done a lot of rigorous studies into, different companies that work. Here's a few hundred case studies we've looked into, right? I think there's a very big focus on basically academics. Whereas at Stanford, what they care a lot about is freedom.
Mm-hmm.
And I think that manifests itself sometimes in some of this entrepreneurial stuff. But
Mm-hmm.
I think overall the culture is a lot more, hey, you're free to create your own adventure.
Mm-hmm.
You're free to decide how you want to spend your time. So I think
Absolutely.
that's a bit of the difference in the culture that ultimately, maybe a bit more like I think people are at Harvard get a much better academic experience because I think the school is more academic versus at Stanford. Like if you go to the classrooms and you're sitting for a class, you realize a lot of people are on their phone. Some
Mm.
people are working on their startups. Some people are not even turning up for class.
Oh.
Even the professors are not as maybe engaged or prepared as the professors here.
Mm.
But on the flip side, I think the point about freedom is that I think more people are just sort of creating their own paths, right? Instead of just going to a class because you're told that you have to go to class.
Yeah. Makes a lot of
And what
sense.
do you think? Like giving your time at
Yeah,
HBS?
absolutely. I mean, having been through, and I think the unique aspect of the HBS case methodology, the rigor on academics was something I personally valued as somebody, especially who didn't come from a traditional finance background, but wanted to get those skills developed. And I think that classes do contribute to a great part of that learning experience.
Mm-hmm.
And also the industry, which I want to go into, which is broadly building infrastructure, housing, real estate,
Mm-hmm.
whether that's working for a development firm or a technology that is helping improve this industry's efficiencies. I think that it makes that the HBS has a much more robust network, of course,
Mm-hmm.
also in this traditional industry. Whereas I think, for especially for technology startup, as you mentioned, the culture piece of it makes the incubation of new ideas and the idea of creating something purely from scratch much more
Mm-hmm.
easily and more inducive than perhaps HBS is. But for an industry that's highly established,
Mm-hmm.
very old school,
Mm-hmm.
to enter that industry, perhaps, that was where I think HBS for me had the most value and made sense. And also, I'm someone who do enjoys putting in the work to study, and
Mm-hmm.
culturally, I think HBS for me was a good fit. It was a
Yeah.
great fit.
Yeah. I mean, in all honesty, after graduating for a couple of years, I think I sometimes do miss and I wish I had a bit more. The HBS experience, especially academically, makes
Mm-hmm.
you more well-rounded in that you make sure that you get a bit of everything, right? You learn a bit about infrastructure, you learn a bit about finance, you learn a bit about HR and all that.
Absolutely.
Versus, I think at Stanford, it was the experience itself is more of like you do what you want,
Okay.
which meant that I think you could be more spiky if you want to
Mm-hmm.
be, right? If you do feel like, hey, I want to be a finance bro, right? Like I took a class because I thought I wanted to be a finance bro and I decided I couldn't. Like I took a class where I was modeling for like 20 hours a week,
Wow.
right? Like basically doing the work of an investment banker without getting paid,
Yep.
like an investment banker, right? And in fact, paying for it. So that was a
Yeah.
great deal. I think you get to be a bit more spiky,
Mm.
but at the same time, looking back, I feel like there were so many things where I wish I had a bit more
Mm.
experiencing. Like I never took a single ops class,
Wow.
right? And part of me, even though I'm not really doing ops, but still, right? Like I feel like some of my work is related to ops
Yeah.
and just getting a bit more of a well-rounded
Yeah.
education, I think could have been helpful.
Yeah, absolutely. I think that's definitely fair. And I think, HBS prepares and focuses on those things more so because I think they do want everybody to be a well-rounded executive one day, hopefully the best, but obviously many people have very successful careers leading medium to large size companies and adding value and steering those companies ultimately for the better. Um, you know, it makes a lot of sense that you went to GSP and you're in VC, right? Which a lot of that ecosystem is centered around San Francisco, around the Bay Area, and of course, a lot of Stanford GSP and Stanford alums or dropouts, of course, was that affiliation credentialing, end up in that space. But you did 2 degrees.
Mm-hmm.
You decided to do, I believe, a joint degree
I did across.
with right across the street at the Harvard Kennedy School.
Yeah,
How did that fit into the plans for you?
yeah. First of all, I would say that I was very privileged, to be able to take the time,
Yeah.
to be able to afford this program. So I think I'll start off with that. I think the reason why I did it was because I've always liked both the public and the private sector. And even though I'm very much in the private sector today,
Right.
you never know where life will lead us, right? And to your point
True.
of like more well-rounded education,
Yeah.
that was my version of creating a more well-rounded education. Because what I did find was, as someone who came from the financial industry,
Mhm.
I was very surprised that most people in business school, especially at Stanford,
Mhm.
they don't think about, hey, there's, there are regulators, there are governments, there are other
Right.
stakeholders
Right.
that, determines whether, let's say, if you're creating a financial app, is this gonna fly, right?
Right.
Is this gonna be compliant and all that? So I think that was a big part of, I think, trying to understand sort of other stakeholders and also sort of
Yeah.
the public sector when I was in business school. And on the flip side, I think there's a lot about the private sector that I think people in government tend to either have misconceptions about and
Yeah.
so on. And I'm sure it's the same in the infrastructure space, right?
Absolutely.
Where I'm sure a lot of government folks just assume that, the capitalists, there are, I think there was a quote, right? Like voucher capitalists, right? Like, the capitalists are all the folks that are, just trying to squeeze every cent of profit, out from the average Joe, right? So I think there's a bit of education on both sides and a bit of
Yeah.
bridging that I wanted to do as well.
Okay. And what was your experience like at the Kennedy School? What did you feel was unique about the educational curriculum that the Kennedy School had, perhaps that made it worth
Yeah.
pursuing at the same time?
Yeah, I really loved my experience at the Kennedy School. I think what made it different from maybe my business school experience was that, first of all, I think a lot more of the people there really were passionate about something.
Mm,
Like, I think most business school people are extremely, at the top schools like HBS, extremely talented, extremely driven, probably going to be super successful and wealthy. But I think at Kennedy School, you see a different type. you see people that are like just very passionate about a particular cause,
Mm-hmm.
right? It could be someone that is very passionate about, hey, I really want to
Mm-hmm.
transform my country's um, development,
Yeah.
right? I really want to go work in our central bank, or I really care about some cause, right? Like LGBTQ rights, or
Yeah.
maybe like some refugee issues and so on, right? I think that sense of passion was very infectious, and people who wanted to make something better.
Yeah.
I think that was number one, quite interesting. I think number two, what was interesting was also a lot of the speakers that came to the Kennedy School, and a lot of the existing like
Yeah.
fellows and all that they have. Like you have a lot of folks there were former practitioners, they were now teaching
Yeah.
as well. And I thought that was very unique. And maybe it's the
Mm.
same at HBS, right? You have folks like, Larry Summers and Ash Carter and all that who,
Yeah.
used to work in the Obama cabinet, and now they are teaching, and they come from
Yeah.
very academic backgrounds themselves. So
True.
they're able to sort of like both bring the very academic perspective, but also like, hey, how it's like, when I used to take a class with Ash Carter,
Yeah.
unfortunately passed away. He talked about the very real issues of how it was like to select a four-star general, right? The kind of issues that go through his mind when it comes
Mm.
to having a diversity lens,
Mm.
and so on. So I think very practical lessons.
Got it.
And then the last thing I would say is being exposed to some of these practitioners.
Mm-hmm.
I think does inspire someone like myself to both have a more public interest,
Mm-hmm.
but also embrace the idea of contributing to the public sector one day. So it makes it, more real, and
Yeah.
it at least makes you feel like, hey, one day you could contribute as well. And I think that's
Yeah.
what happens for a lot of HBS alums as well, right? End up,
Mm.
make a ton of money, the Mitt Romneys of the world,
Yeah.
and eventually decide they want to do public service.
Absolutely. I mean, Mitt Romney's coming next week, Monday, in
Mhm.
fact. So we'll hear from former Governor Romney and Senator, current Senator. You also mentioned a few questions earlier. You mentioned this reversible decision piece, and you also mentioned on the podcast that as it relates to choosing grad school, you felt was a very reversible decision. Can you elaborate on that?
Yeah. So, in hindsight, I think I had a great grad school experience. I honestly wouldn't have changed anything about it.
Mm-hmm.
But when I first did grad school, there were a lot
Mm.
more uncertainties,
Yeah.
right? Like you mentioned, doing it during COVID. Do I
Yeah.
really want to spend so much money and time doing 2 degrees? Um, at that time, it wasn't as clear that it was going to be beneficial and
Mm-hmm.
transformational, right? In fact, I was actually quite skeptical
Wow.
going to the program because
Mm-hmm.
I was doing pretty well in my career. I was in both my jobs before my MBA. I was promoted to post MBA positions, right?
Mm.
So it didn't feel like I really needed to go to grad school during an MBA. But the reversibility came about in the sense that there was a bit of reversibility, but also a bit of regret minimization. Right? I do feel like a lot of the folks I really respected
Yeah.
did MBAs, and they said good things about it. So
Yeah.
there's a part of me that feels like, yeah, I could probably not have done one, and did well for the next 20, 30, whatever years. But also sense that, maybe when I'm 60, I'm going to regret having not done it. Or maybe 10 years out, I'm going to
Yeah.
regret not doing it. So I feel like it was better to at least give it a shot. And how it was reversible was honestly, if I really hated my experience, I could just have dropped out, right? Like
True. True.
if you
True.
drop out today, like I'm sure you could, do very well, either raise a fund or something. In fact, one of the guys I really respect, yeah, he dropped out after his first year at HBS, started a fund, and he's doing very well. So I think that's, once you get in, I think that's the hard part, right? You could always drop out if you feel like
Absolutely.
it's not a good fit.
Not to encourage any fellow classmates to drop out or anything, of course, but if people do, certainly people can very likely succeed since they've gotten into the program, of course. It's a great indicator. Um, speaking of advice for people, hopefully some of our listeners are those that are hoping to either attend an MBA program or an MPA program. or enter into a career, as you've done, into the venture capital space or the startup ecosystem. What advice would you give to those folks listening in that want to pursue a career in the space, or perhaps those not considering a traditional linear career path as you yourself done?
Mhm.
What advice might you have for those individuals?
Yeah. I think first of all, I would try to think long term.
Hmm.
And in a way, coming back to the grad school point, I saw it as a long term investment,
Yeah.
right? If I look at it as a short term investment, honestly, the ROI,
Terrible.
it's terrible, right? You're
Yeah.
taking 2 years of your prime and blah, blah, blah. But I think taken as a long term investment,
Hmm.
I think it will affect your choices differently. And I would say the same for careers, right? There are certain jobs where, or certain organizations where you feel like, hey, maybe I could be there for a quick buck or
Hmm.
whatsoever. But I would say, like, think long term, right? Because as you
Yep.
think long term, I think you will start thinking about, hey, what kind of skill sets you want to invest in, right?
Right.
What's a life worth living long term? And therefore,
Absolutely.
I think you think more thoughtfully about the choices and the kind of careers you want to pick. So I think that's number one. Number two, I would say, people talk about networking,
Yeah.
but I would say build meaningful personal and professional relationships, and invest in them in a way long term as well. Because I think
Yeah.
those could really pay dividends in many ways, right? Like, again, going back to how I even ended up in my current job,
Yep.
taking Steve Jobs' quote, like, looking forward, nothing makes sense, but looking backwards, everything connect. And I think how I got my current job was honestly just, because of a few people that make sense. Just to connect the dots. So, as mentioned, I got my job because I was literally talking to my mentor
Wow.
about getting some career advice. And how
Yeah.
I got connected to my mentor was actually through another mentor, who was someone he was the CEO of a bank that was a client when I was doing consulting.
Hmm.
So we worked, actually very closely over a year, and we built a
Hmm.
relationship over the year, and we kept in touch. And he continues to be a mentor of mine, and he was the one that connected me to the second mentor.
Hmm.
So, like, looking backwards, obviously it all makes sense, but at that time, I think it was
Yeah.
just genuinely trying to build
Hmm.
connections and trying to invest in these relationships. And I
Yeah.
think ultimately, in a way, they bore fruit for me. And I'll encourage others to do the same.
Yeah, absolutely. So definitely don't be afraid to reach out to people and build your network,
Yeah.
whoever you feel is important for you.
Yeah.
Uh,
And I think on that reaching out point,
mm,
I think the two best classes I took in my MBA,
okay.
I kind of had the same takeaway from both of them,
Okay.
which is that a lot of times you are the one in
Hmm.
your own head that's stopping yourself.
Yeah.
So a lot of times you should get out of your own way.
Mm,
Because what's stopping us, for example, from reaching out to a lot of folks, whether it's someone more senior or someone that's more of a peer, it's a lot of these stuff in our mind, right? We're
mm,
making up stories of, hey, William is going to be too busy. He's not going to reply to me,
yeah.
and all that. But I think ultimately, if you stop yourself from getting your way, and you just try, I would say it ends up doing pretty well.
Absolutely. For those in work and in life, definitely never be afraid to reach out.
Mhm.
Um, for folks that are looking to, pitch to a startup, let's a pitch to a venture capital firm, as we briefly discussed this earlier. What are some factors they should keep in mind before
Mhm.
they go out to raise their C round or Series A, as you mentioned?
Yeah, so I would say, number one, make sure you're talking to the right investors.
Hmm.
So whether in terms of their sector focus or the stage focus or their geography focus, making sure you're even talking to the right people.
Yeah.
I think that's number one. I think number two is to make the job easier for them in a way, right? They're the stuff that they care about. I think, for
Hmm.
example, YC has done a good job, right?
Mm.
Here's what your pitch deck should have, and
Yep.
here's what your pitch should have. I think, in a way, he's done a good job of summarizing some of the key areas that, if you have to do an elevator pitch to
Right.
someone, right? What are the things they care about? What's the product? What kind of traction do you have? How much you're looking to raise, what's your team's background, some of these high level stuff, right? Like
Yeah.
get it out as soon as possible,
Got it.
so that you make the job easier as well. And number three, what I would say is that ultimately, I think, as in life, I think it's all people business. If you can get a warm referral, that's always the best versus cold outreach. I think cold outreach has its perks as well, but
Yeah.
if you get a solid warm intro, that's always something that I will look at first.
That makes sense. You mentioned that, these are the factors to finding the right investors. What might make a firm be perhaps the wrong investors for a startup?
Yeah, it's a good question. I think there could be a wrong investor for different kind of firms as well.
Mhm.
I don't think that's a uniformly wrong
Right.
investor.
Of course.
I think number one, it's also knowing what you need,
Okay.
right? Because sometimes you can also be honest with yourself. Like you feel like you've gotten everything. All you need is money, right? Then in that case, you can just find anyone who's has an okay reputation and is willing to give you money at the highest valuation, right?
Yeah.
That's one way to think about it.
Yeah,
But I
yeah.
think at the early stage, what a lot of companies need is still like sort of some of the hand holding or like benefiting from the mentorship or counseling
Yeah.
or even just like, the company of someone
Yeah.
who's maybe done it before, someone who's looked at similar stuff before. So I think knowing what you need is one.
Yeah.
I think number two, I would say a wrong investor is probably someone that don't align with you on very fundamental stuff, right? In terms of
Okay.
how you want to build a company, in terms of how you want to run a company,
Yeah.
and in terms of some of the long-term vision. Because some of these stuff, I think, at an earlier stage, it's like going on a date, right? Like,
Yeah. Relationship advice
Right,
too,
back-
not just VC
back
funding.
to but it's exactly like relationships, right?
Yeah.
You meet on a date, you vibe well, and you think, hey, this is gonna last forever. But again, I think what people don't realize is that at our stage when we invest in a company, we're ready to be with them for 8 to 10 years, if not longer. So it's almost like it's probably the length of average marriage in the US, right?
Yeah,
Where
unfortunately, man. Like, yeah, average marriage age is about, I think, 8 to 10 years
8 to 10
or
years,
so.
exactly. So just like in a marriage, you got to figure out, do you have similar values? Do you believe in a similar future?
Yeah.
I think it's the same as well. Because if you find investors where the investors think, hey, you should do B2C stuff, and you're so sure that you want to do B2B, or the investor thinks that, hey, you should just make as much money as possible, versus you're someone who wants to, invest a lot and not generate cash for a long time. Look at the Amazons and the Teslas of the world, right?
Yeah.
They were not generating cash for a long time.
Years, decade,
Decades, exactly.
Mm.
I think finding investors that align with you on some of these fundamental stuff.
Absolutely. I mean, I believe there was an offer for Mark Zuckerberg initially when he was building Facebook at the time to sell when a company offered $1 billion, and the other board members, I believe, was like Peter Thiel, perhaps, and then a few others. They're like, why don't we sell this, right? For $1 billion is a lot of money, but Mark held on, right? Persuaded them, and look at where he is now, right? It's more, half $500 million, $500 billion, more than that.
Yeah. Or I mean, this is not investors, but look at OpenAI,
right?
Where I think the board and the investors and the management team, all have very different interests, and this created so much drama.
Absolutely.
And the rest of us would just, checking Twitter,
absolutely,
all the time to see what was happening there.
Yeah, absolutely. So it's important for founders, for the teams, the employees, the investors, all to be aligned to share the values ultimately of that company, of course.
Yeah.
Now, we've talked a lot about how for a startup, how for a VC firm, how to be successful there. I want to dive into, for our audience in the last, about 10 minutes of our time, your habits for success, right? You are, by all metrics, extremely successful. But behind the scenes, David, what does that look like? Tell us a little bit about what you do for fun. What do you do on an off day? Unless it is work 24/7, which I don't believe.
Yeah.
So how do you separate the work, the fun
Yeah.
from the work?
Yeah. I think first of all, for on the work side, I think it's important to find something that you enjoy,
Hmm.
something that you find fun.
Yeah.
And I think that's something that most people underrate, right?
Yeah.
Because if you're doing something that you find fun, then
Hmm.
work becomes more fun, right? That's kind of on the work front. I'll first talk about work, and maybe I'll talk about what I do for fun. And I think on the work side, I think it's also important to find out what works for you,
Yeah.
right? Like what's your personality? What do you like doing? What
Hmm.
environments do you thrive in?
True.
And I think just like again, the pre-selection is so underrated. I think
Mm.
finding an environment where you can thrive, I think is so important. Because what might be an abusive boss to someone might be great for you, right? You like someone up your ass, maybe, right? Or maybe you're someone who likes a more laissez-faire environment where you're free to do what you want, hunt for stuff and all that. So I think
Hmm.
finding an environment sort of like where you can thrive based on your
Mm.
personality and your preferences, I think that's very key.
Yeah.
I think no place is perfect, but that was a big part of why I ended up at my firm, GSR Ventures. I do feel like a lot of that was a good environment for me.
Got it.
I think on the work front, one last thing I would say is also like finding your flow in
Hmm.
terms of figuring out, for example, like how much, what time of the day uh, are you most productive in? How do you like to schedule your time
Mm.
and how much free time you want to have, how much thinking time you want to have, how much hustle time you want to have, right? I think sort of planning out your time and getting to the flow of
Mm.
things is important. So there's a
Yeah.
lot of like micro optimizations I do there, where,
Mm.
for example, if I do external meetings,
Yeah.
I tend to schedule them back to back,
Got it.
right?
Totally.
So that it's kind of like, all right, this whole afternoon, I'm sort of in that meeting mode, right? Versus, I think for me, the worst would be I do for a meeting, then I'm supposed to do some deep work and I get some emails that
Mm.
disrupt me and I get some Teams messages and I go for another meeting where I'm still thinking about the last thing. I think you're just not in flow. So that's sort of on the work front. I think on the personal front, it's also about finding what works for you and what gets you into the best
True.
shape. So for me, I do a couple of things that I've come to really enjoy. Like I really enjoy going to the gym, just going for a nice workout. I think that just makes me feel better,
Yeah.
like physically and
Yeah.
mentally.
Of course.
I think like you do some stuff for fun, right? For example, I do like cooking. I find it was something that I picked up during COVID.
So I've had dinner. David has cooked dinner for me before,
Yeah.
so
Not
wonderful.
not sure if, yeah, I hope the food is okay, but at least for me
Absolutely.
it was very I do enjoy cooking. Something I picked up during COVID, right?
Yeah.
Because I realized the food delivery stuff is
Right.
so expensive
So
and
expensive.
so bad. So I started cooking, and I realized it's quite therapeutic, right, in terms of some of the stuff. And for me, I actually do some of my best thinking when I'm
Hmm.
doing something almost monotonous, right, like cutting or like
Right.
in the gym, because I
Absolutely.
think sometimes you get into the flow.
Yeah.
And I do like traveling as well. So I love traveling. Like I was just, for example, flying to Boston. I
Mm.
did a long layover in Istanbul.
Wow.
So I was there just like meeting some friends, exploring the city.
Yeah.
So I think that's something I find fun. So I think definitely like have your own free time, but as much as possible, I think set some rules,
Yeah.
right? Because I think the rules are easy to follow in
Yeah.
terms of, for example, even for my own, mental health or whatsoever. I try not to do anything on Saturdays,
Got it.
right? Nothing work related on Saturdays. This is just a day for reading,
Just
a day
resting.
for
Got
resting,
it.
a day for your own stuff.
Do you have for yourself? Do you have like a clear separation of work and personal time? Do you like have strict cutoffs? You mentioned Saturday, but for the rest of the week, is
Mm-hmm.
it? Do you feel you generally are like work, and even when it's time away from work and work something comes up, do you
Mm-hmm.
feel that for yourself, you thrive in terms of like a more blended, blurred environment, or
Mm-hmm.
is it more clean cut for
Yeah.
you?
Yeah. So I would say that VC is also quite unique in that there is quite a bit of flexibility, but at
Hmm.
the same time, I think there's quite a mix between work and sort of personal life.
Yeah.
For example, like even a lot of some of my portfolio founders,
Hmm.
they're like good friends, and we're like texting each other all the time,
That's great. Yeah.
and they would just ask me about the most random stuff. And if they
Got it.
text me at 11 p.m., and I read it, I would just reply them. So
Got
in
it.
a way, it's hard to really separate. And I think ideally, you want to also find a job where
Yeah.
it feels more fun and you're willing to blend some life into it.
Yeah.
But as you pointed out, we got to find some separation. So for me,
Yeah.
again, I like to pick the rule based stuff, right? So
Yeah.
instead, maybe it could be something like on regular days, I try to sleep earlier.
Okay.
So like, try to have no work beyond 10 or 11.
Yeah.
And then Saturday is like, no work at all.
Absolutely. So yeah, getting into that, a lot of people are looking at, people are there's been interviews, there's been graphs of people saying, "Oh, like this is when Bill Gates or Mark Zuckerberg or Jeff Bezos wake up and, ascribe that to their success and might be a factor." But what for you, what's a routine like for a typical day for you? When do you wake up? Are you a morning person?
Yeah.
Are you like an owl? Or yeah, what's kind of the routine of a day for you?
Yeah. So I think I'm also trying to iterate all the time,
Okay.
both in terms of my routine and how I do my work. I think what people sometimes don't realize is, I think there's just another phrase where we we tend to maybe like looking at yourself in the mirror, right? It's hard to see the daily changes.
True.
But then if you ask, like your mom, if you haven't seen you in a year, you're gonna be like, whoa, you became so much more handsome, right? Or you grew fat or whatever. But I think similarly, I think a lot of daily habits and changes. I think we're always iterating.
Yeah.
So it's hard to say like, what worked for you a year ago or 6 months ago.
Yeah.
It's gonna be what works for you today or 6 months from now, right? But in terms of my daily schedule, again, I'm also trying to iterate, but I think my ideal schedule would be if I sleep between, let's say, 12 to 7.
Okay.
So I like to sleep relatively earlier, even though I'm a night owl. Right? But I don't want to sleep too late. And I think it would be good to just get the day started, with some exercise and some meditation and reflection.
Yeah.
Because I think that sets your day off on the right note. Obviously, like things happen at work, right? Things blow up,
Keep you busy. Yeah.
keep you busy. I'll prefer to do more of the thinking work in the morning as well, and maybe some of the more like meetings and routine stuff, for the afternoons.
Got
And
it.
then evenings, I would prefer not to work too much. Not just because I value work life, but ultimately
Yeah.
I think it's back to how am I most productive.
Makes
What I
sense.
found is that if I work too much at night, and
Yeah.
I still do a lot of work at night, I tend not to sleep as well.
Yeah.
And also a lot of times I might not be as productive. So sometimes if I have something, let's say that I was planning to work at 10 o'clock, and if it's not so urgent, what I'll prefer to do is just, hey, screw it. Just go to bed at 10
Yeah.
and try to wake up at 5, right? For example, to do it.
Yeah. Get your work done early. No need to finish all the way, right? Last question, last little bit is, you're obviously very ambitious. You're very mission driven. What drives you in the years ahead? What are you passionate about that gives you the energy to get up and do the work that you do? What are your kind of future projects that you're really excited to be getting into for the new year?
Yeah. No, it's a good question. So going back to some of the MBA stuff a little,
Okay.
which
Taking
actually
it back.
turns out to be sort of comes back in my life afterwards was for my GSB essay. I have to write about what matters to me and why. And so what I wrote about was helping people fulfill the full potential. And it's something that obviously when we applied, just like when you apply to HBS, we write those essays thinking, hey, the most important thing is to get in. But I've actually gone back to look at it several times, including when I decided to go into VC.
Yeah.
And even now, as I think about what I want to do, eventually. Part of the reason why I picked VC was that, I do enjoy the intellectual side of investing.
Yeah.
But I think it was also a type of investing that allows me to help people fulfill their full potential. Like, I really enjoy, for example, working, coaching, or just being a friend or a companion to some of my founders and really helping them, grow to become very successful leaders and managers and all that. And to me, I just found that fulfilling. Obviously, if the company does well and makes money, that's what we ultimately want as investors. But to me, I just find that very fulfilling. So I think that as long as I keep doing work that allows me to also help others fulfill their full potential, I think that's something that I find rewarding, right? And this could include, even if I were to just become a manager of corporate, I think what I like to make sure is that there's
Yeah.
very clear mentorship and training and all that, so that my team can become successful. Right? That's what I care about.
Got it.
I guess a bit of what I would like to apply this to outside of work. I think it's about also helping, through mentorship or other avenues, helping some other folks succeed.
Yeah.
Because just as, for example, I'm passionate about finding and funding underrepresented founders. I think there's a lot of folks coming from underrepresented communities or backgrounds that, could really benefit from, at least they get to hear about HBS and they realize,
True.
it's maybe a little more accessible than they thought. So I
Yeah.
feel like if I can do my part in, bringing people access to some of these opportunities, I think that's something that gives me energy and mission.
Absolutely. Well, this is the longest podcast episode I have done thus far, over an hour and 15 minutes. We can go into so much more, but perhaps for a future podcast episode. But David, thank you so much for joining me on the podcast.
Yeah. Thank you so much for having me, Willem. I learned so much from your own experiences as well. Hope to visit Omaha sometime.
Oh, you
See what's the
gotta.
magic that produced folks like you and Warren Buffett.
Absolutely. Well, we're now definitely a bit of ways, a few decades apart at least, but definitely it was a great growing up place. Well, thank you very much.
Hey, thanks so much for your time.